Should I buy Pinterest? Hey, welcome to Dow Stock Talk, where I talk about topics relating to investing in finance, but more specifically, the stock market. On this video, I'll be doing a stock analysis on Pinterest. I will cover the company's overview, the key highlights, the streams of income, the competitive advantage, the risk factors, then the financials, and last but not least, I'll be giving you my personal insight of whether I think Pinterest is a buy. But before we get started, make sure you smash the like button because it helps the YouTube algorithm, it helps YouTube know that this is quality content, and help my videos reach a broader audience. And also, if you're a big fan of finance and investing t-shirts, make sure you check out my store, Wall Street Stock Apparel, where I make custom finance and investing t-shirts. Okay, sorry about the audio. If the audio is not well, I'm at a different location, but let's just get into it. So we have Pinterest, which is a image sharing social media platform in which a lot of individuals can get ideas, inspiration, and discover unique information through visual images. A lot of times they either do this with a pin board where people put together different types of pins and it pretty much captures a certain type of genre. So this is just a little bit about the Pinterest company. Let's check out a few key statistics. So the total amount of active, or they call it AMU, monthly active users for Pinterest is 475 million. 50% of the Pinterest audience is outside of the United States. The global monthly active users for Pinterest has been increasing by 30% year after year. 77% of Pinterest audience are females, only 14.5% are males. I just want to highlight some statistics that I found that was interesting. For the global earnings year over year is 125%. That's really good for global. International is 227% year over year. That's really well. As far as US, which is 107%. So the revenue have been growing pretty nicely. Now let's check out the monthly active users. Now this will be important because a lot of times I'm kind of skipping around, but Pinterest makes all their money from ads. So you definitely want to see the monthly active users increasing. The more people on your platform, the more ads, the population on the platform, and the more competitive it gets, the more they can charge and make from ads. Now, the monthly active users, as you can see, the globally has been increasing by 9% year over year. International is 13% year over year. And for the United States, we've seen a decline by 5%. Now, this one, the US decline of 5% year over year, is a bit of concern to me because Pinterest is still in its growing stages, losing monthly active users because, like I said, they would make a lot of their money from ads. So we did see a international growth, which is good. And I looked at the S1 filers and they said they was really trying to focus on international. But that monthly active users for the US, actually a decline is very concerning if I was an investor, but I'm not going to focus too much on that. And the other reason why it's super important, if you look at the average revenue per user for the US for quarter two, for average month, the average revenue per user is $5 versus global is $1.32. So they're getting 5 times as much of revenue from US users than global. So when we go back and we see that decline from the US, to me, as far as profitability or revenue growth, to me, that's a little concerning. I don't want to focus too much on that. As you can see, they have the cost of revenue, 19%, research and development, 23%, sales and management, 70% year over year, G&A, general and administration, of 82%. Now let's go over the streams of income. The streams of income for this one is very simple. They pretty much make all their money off of ads. So we don't have to really go into that too much. If we're looking at the competitive advantage, so the competitive advantage that I would say from Pinterest, I would say the competitive advantage is their technology and visual images. So the visual image, in my opinion, compared to other social media platforms, it definitely gives you the ability. Let me actually guys show you really fast. So if you can see, they got contemporary kitchen, and this is what I would consider as far as visual images. Unlike Google, it really customized to if you have a certain genre that you're kind of looking at, and you can easily pin different ideas. So if I'm looking at with the competitive advantage, as you can see, when you hit kitchen, it have all other different types of related kitchens. And I believe, see how in each particular, if you was just want to click a similar item from the jar, it already aligns it as far as it allows you the ability to buy things as well. So that to me, the AI technology to me would be the competitive advantage, the customization with the images where people can actually borrow other people's images, put it together, share easily. So I think that's what that competitive advantage is. Competitors, I would pretty much say it's anyone that has a social media presence that had the ads business model. So the Facebooks, the Googles, the Twitter, the Snapchats, I think I named them all, but anyone that has the ads, the business model where they make the majority of their money from ads, I would definitely say that they are competition, because with the ads business model, attention and time spent on the platform is key. I mean, that's what their competition would actually be. Now, if we look at let's go to the risk factor. I'm just going to briefly go over them. Steep competition, like I said, Facebook, Google, Twitter, Snapchat. Will they be able to increase their monthly users? As we can see for US, there was a slight decline. It was only one particular year, but you definitely want to keep an eye on it since all your money is going to be made from ads. Also, will ads, if they drive more ads, will it mess up the overall user experience? You definitely want to keep that in mind. Another thing is, I kind of noticed when I dig deep, a lot of their data actually comes from Amazon Web Service. So to me, that's reliant on another company to produce and store all your information, could be a little concern, because if anything was to happen, that could be, a problem. Also, if you think about it, Pinterest have a lot of images and stuff like that. So you have to keep in mind, you don't want maybe the rules and copyright and stuff might change. So that could, become a problem. Also, you got to think about it. You have a lot of third parties that they collab with. So if something was to happen to the third parties, like a security breach or any type of thing, that could be a particular problem. So I just briefly went over some of the risk factors. Now, let's jump into the financials. So this is simply Wall Street. I'm just going to go over some key information. As we can see, Pinterest, they haven't been on Wall Street for a while. I think they've been out since, I think it's 2019. So they started off as about, let's just say $34 a share. So as of August 12th, the share price is $56.76. This stock price is like a relatively new company, so it's kind of all over the place. It's not necessarily something I would like to see, but if it's a new company, this is not that big of a deal. Scroll down to the 1-year return, 61.6%, which is not bad. The industry is 63.7%, so at least it's keeping up with the industry, as well as the U.S. market is only 33%. Okay, if we look at how volatile, it is more volatile than the industry, but since Pinterest is a relatively new company, I would not be too concerned about that. If we look at the evaluation, okay, so according to Simple Wall Street, it's slightly undervalued based off of the future discounted cash flows. Now, the thing about the future discounted cash flows, all of the assumptions is really what drives the price. So everyone has different assumptions. Now, like I said, I don't put too much emphasis on it, but this kind of just gives me an idea of, as far as like Wall Street or analysts, what are their future projections. So I just keep an idea. And by the way, if you wanted to see someone else, check out Scott. He has a whole channel where he goes over different types of companies with discounted cash flow and all types of that. I'll just have it up in the suggestion. I have it up at the top. You guys can check that out. The reason why, if you go to this analysis checks, you kind of really got to put things in perspective. A lot of the checks is based off of earnings Yeah, because Pinterest is not really profitable, they did in the last, I think, 2 quarters or something produce some type of earnings, but it's haven't been enough where you can assess it. Like for example, the POE ratio, because it's a growth stock, you can't really pay attention to that price to book. All of that stuff is not really relevant. Like I said, with these, you kind of got to assess it individually to see whether it's a fair comparison. And all of these, I don't think they're good metrics to focus on for Pinterest. Now, if we look at future growth, and to me, any type of growth stock, this is kind of what matters most, because when you see investors pay in a premium relative to their earnings, they're expecting high growth. And that's why the future growth, earnings, and revenue is key for any type of growth stocks. So let's just see what analysts are saying. So this is their forecast in the next 1 to 3 years based off of 26 analysts. As you can see, they seem pretty bullish on it. As far as the earnings growth, 41%, that seems very well compared to the US market, 14.6. As we can see, they expecting to have return on equity is supposed to be 22.8%. High growth revenue. As the bluest revenue, as you see, revenue is steadily increasing. The earnings is the green. So like I said, most of the time they wasn't profitable. Just recently, they have been able to produce some type of profit. But let's just look at the future cash flow, because the future cash flow has been really picking up lately and it's projected to grow a lot. And that's why probably when you go up here for the Simply Wall Street, that's why they have the fair value at $60, because as you can see, they are expecting the free cash flow to increase rapidly, as you can see on this graph. I like to kind of switch over so people can get different views. If you wanted just to look at the quarterly, as we can see, this is the revenue is in green, earnings is in blue. As you can see, so for Q4 2020, they was able to produce some profit, $207 million. And for Q2 2021, $69 million. But as you can see on the larger, as far as annual, they was unable to produce profit. Now, also, if we're looking at valuations, it's also good when you're looking at growth stocks to look at the price to sales, because the price to earnings, people normally try to grow revenue first, fast, and then worry about earnings. So when the price to sales is 16, in my opinion, that's kind of high. For price to sales, seems like you're paying a premium even at looking at it from the revenue perspective. The forecasted annual earnings growth, they have 40% in revenue. Simply Wall Street for the next 3 years, they have 23%. As you can see, they got the past performance. The historically annual earnings growth is 16.6.2. I won't worry too much about that. The past earnings growth, the company, of course, last year they wasn't profitable. The 5-year annual earnings growth for the company was 6.2%. Now, as we look at the financials, I've even forgot to mention the financials is really nice here. As you can see, the assets cover the short-term and long-term liability. As far as their financials, as you see, they got a lot of equity, a lot of cash, very little debt. So from a financial perspective, as far as that balance sheet and stuff like that, it's looking really solid. As we can see a lot of insider trading. I don't pay attention to this too much, but if there's a lot of inside trading, to me, it could suggest that a lot of individuals may see a lot of future concerns. So to see that much inside selling, I just want to keep an eye on that. As you can see, a lot of institutions, I like to know the percentage of who owns what. So we know that if institutions own 67%, they have a big impact on it. The general public is 18%, but the insiders, investors is 12.6. But I just like to keep in mind of who's owning the stocks. But in a nutshell, what I think about Pinterest, I think Pinterest have a lot of potential. I actually think it's going to really come down to how well they can get people to buy things. They did add a buy button. At this time, it's kind of really hard for me to kind of tell because when I looked at Facebook originally, I looked at Facebook as just like a social media platform when that bigger plan was the marketing and ads. Companies like Pinterest, for this one, because I don't know too much and they're selling for such a high premium, even at revenue, I probably would pass. But I will say that Pinterest does have a lot of potential. For me, I wouldn't buy it, but we did see a major pullback. So if you were super bullish on Pinterest and you think you're pretty confident, that's okay. But for me, I'll pass. If I see maybe Pinterest go to $30, I might reassess it. But for me, Pinterest, even though I love the company, the share price relative to their price to sales to me is high. High. We've seen a slight decrease in monthly users for the US. So it's just a lot of ifs and stuff.
But that concludes Dallas Stock Talk. Let me know what you think about Pinterest. If you haven't already, make sure you hit the like button. And if you're new, make sure you subscribe to my channel. Also, if you would like to see me do any topics relating to finance and investing, just make sure you drop in the comments below.